Hello, good morning. This is Julie, J Auto Trading Strategies. I want to show you my concept of zero to infinity and how I use certain techniques like Martingale to trade in and out of the distribution levels. People use this system for options, obviously, for their option contracts using implied volatility, but I use it with real volatility, and I think it's much better because these are futures. We don't need to go to a synthetic of a synthetic. We can go to the real volatility and trade in and out of these distributions like the algos do. So let me show you in a nutshell, make it real easy for you so that we're all on the same page, what I'm looking to accomplish with this trading system. So first I have the daily distribution on the chart. The first part, let me take the tails off. In the indicator, you can design your distribution the way you would want it to look. And I don't want tails right now, so I'll take the tails off. And so inside these boxes, that is your daily range. And as you can see, when the algos get to the end of the daily range, it's not really meant to serve as a stop and reverse system. It just means that you've hit the end of the range, and algos sometimes will just go flat and walk flat on that band forever until the end of the session instead of, stopping and reversing to the mean. Or it can stop and reverse to the mean. Volatility trades in between these bands. So this represents the daily range. And when it breaks the range, then you want to trade to a second target, the tail target. So I can do that a couple of different ways. I can measure the distance between the EMA to a threshold, like right here. The standard threshold's 1, 2, 2.5, and that's usually in a normal move appropriate. So like right here, you can see we got to the 2.5, and then it popped back, going back to the mothership. My linear regression is below it. The linear regression that I have, my LRT lines indicator, and then I have the 34 EMA above it. So I measure from excursions away from the EMA to my threshold targets, knowing that if it hits these lines, more likely than not, in a normal trading environment, that it's going to return back to the band. Now, sometimes it can get over its skis and really flush down there, and so you can get an approximation of where that is so that you can be ready the next time it makes that extra thrust move. Leaving the 2, where will it go? It'll go to the 4, right? It's just logical. Like right here, see, it went to the 4 and then came back. So using these very simple techniques, we can get our arm around price action. Now, what I've done with my zero to infinity postings, algos will often look to the middle of the range to launch a trade from. So in statistics, zero and infinity, you would want to find your middle of the range right here and be aware that if that breaks, you want to go to infinity, zero to infinity, and that's what they did. They went from zero to infinity. Infinity's the tail. So that's what I'm looking to do, long or short. Now, sometimes they'll take it to the band and then take it back down to the one and bounce it, like yesterday. So I was trying to bounce yesterday. Let me move this over here. Yesterday, I was trying to do my 0 to infinity bounce against the range right here, and it did not work. I mean, I they took it to the one and they bounced it off the one, and then they took it up. So I'll martingale in and add a second position here. And the stop, of course, is either halfway between uh, the 1 and the 2, or whatever your risk profile is. If you see that it's like it, going to the infinity to the bottom one, you certainly don't want to be martingaling in and losing a shit ton of money. Have a plan, a trading plan, but being able to just trade inside the distribution, realize that anytime you're inside the one, so anytime we're trading inside the one, it's going to be rotational. It will be up and down, up and down, up and down. So it's really kind of like the worst place to enter a trade, but the best if you're going to be launching a 0 to an infinity trade from. That's why I sometimes just prefer to wait until I'm on the right side of my bands or the Globex, and I'll put my I have a another indicator, my opening range indicator, where I can put the Globex open and see how that lines up in my distribution. So let me put that on the chart real quick and show you. There we go. And this will be the pink line. And often it'll be in the middle, right smack dab in the middle of your daily distribution. Like today. Today it's right in the middle of the distribution, so that's going to get hit a bunch of times. Okay? Whenever it's in the middle of the daily distribution. But yesterday we were high, and that's why it opened and led out going to the 3. When it broke that distribution, I was trying to pop it off of the middle, and sometimes that'll work as your martingale. First martingale, second martingale. So I was just doing, some, bouncing the dimes off the curb, trying to get it back to the bands, and then break the bands and go up. It did not work for me yesterday. But that's why it's sometimes just better to wait till you're on the right side of the bands and trade 0 to infinity, walking the line like it's more easy to do instead of trading against counter trend. So let me take this Fibonacci middle band off. Today we've got the Globex serving in the middle. We've got the bands crossing where it's working its way up. So it's going from 0 Globex to infinity. And so I would expect that 2 to get hit and or the 3. Now if it hits the 2 and comes back to Globex, again, we're inside the distribution. So like I said, it can be up and down, up and down, up and down. It can just go inside the distribution and go flat. Let's look for a flat day, like right here. See what I mean? It can just be a shit day, right? Anytime you see that your distribution has opened up wide, flat, I mean, just say no thanks, because they're just walking that band. Do you see how that works? Terrible trading. Go find something else to trade. What we want to see is a separation of our bands, our EMA linear regression band, and taking us to the promised land, taking us to the 0 to infinity this way. and then using our knowledge of how far the excursions go away from our EMA before it turns around and comes back. So simple tools, really simple concepts. Using Martingale, if you see that you're on the wrong side of a distribution and try to get like bounce the one, say you were trying to go long here, you could have tried to bounce the one right here on the, if it's going to go back in the direction of the trend, it's going to bounce on the one, is what I'm trying to say. So I just trade 1, 2, 3, and a lot of the times I'll just wait for it to break the 1 to trade to the 2 or the 3, because if it breaks the 1, the only place for it to go is to the 2, right? 1 to 2 to 2 to 3. Very, very simple. So I do other things with the indicator. I can put a nighttime custom distribution on it, and I'll draw it for you right now so that you can see it. So instead of a daytime, we can change it to the Globex distribution. So I'll put 1700, my time frame is central, so 1700 to 0800, the central time frame. And I've already got a template loaded for that, Globex 1700, and this is for the equity indexes, so I just changed it to 8. Let me take the fibs off, and let's just see inside the range distribution. So you see today, or yesterday, they bounce on these Globex lines also. So here's your Globex, and let me take the nighttime or the daytime off so that you can see this. You eventually get used to looking at the multiple distributions, but I will tell you that I get lost all the time looking at it. I'll get my lines confused. So here's just the nighttime, the Globex. And it's the same thing. You've got your 1 in the dash line. Let me make those dash lines thicker. So the 1 is in the middle. I can make that a solid so I can differentiate it and make it easier to see. There we go. So the 1 is in the middle, and then your 2 and 3. And it's the same thing as the daytime, except you're in the nighttime. And you see how the algos respond? So you can put these distributions together with your trading system, whether it's volume profile or another service like Infinity's levels. You can put their levels, draw their levels, and see how they line up to one of the JETS distributions. So you can, marry another system with this, and then that will give you a confluence area that you can use as a very high probability pivot. And I think that would be a good combination to have, actually. Infinity with this PT system or the spot gamma. I think both of them would work very well with this. But and again, you can put the tails on the nighttime also. So if I add the tails to it, that'll give you some targets to trade to. And again, these can be customized. So nighttime, I usually don't like giving real wide tails. I don't know why this is messed up. Let's just do this. So you can set your tails away from PT1, 2, or 3. And you can use regular Fibonacci numbers. I'm just using 25, 50, 75, 1 just to show you. Look at that. Give you targets to trade to. So very algorithmic, whether you want to use, keeping an eye on what the normal Gaussian distribution distances are for these thresholds before they snap back to the bands, or using other methods like I'm showing you, get below a Globex distribution by a certain number of offsets from that, using any kind of number that you want, scheme that you can come up with, 33, 63, whatever your, preference is. Most people will just stay with the standard Fibonacci sequenced, um, 618s, and look for 50s and 30, what is it, 32, 30, 23, 6, 38, 2, 382s, things like that will work in the equity indexes. I like the statisticals, 34, 68, 95. 134 is a favorite one of mine. I think Jam likes that one too, 134. But you can use these 2.3s, 2 point, below other things also. He uses it for the daily um, Bollingers, but one standard deviation. But whatever you can measure your thresholds from is the important thing. You pick what you like. You pick what you like to do. So when I add the daily distribution in with this, so let's put the daily back on. Again, it can get busy, but once you understand what you're looking for and realize that you're at a daily and in between, a Globex 2 and 3, that's a perfect place to look for a pivot, and then take that long-term pop off of a bottom, and then, $2 move. That's good money, right? All right. So that is that. And if we want to look to see the current NQ, you can, now the yellow is my 1 hour initial balance. I didn't tell you that. Yesterday I was also putting a 1 hour initial balance on the crude, where I can take the first hour of trading in crude, it's between 8 and 9 a.m., and get a second intraday distribution on top of my Globex and daily ones. But then the lines get really busy, especially when you're running tails off of all of them. But I'm using, lines to trade to for algos. And I didn't explain this bottom thing to you. This is my oscillator telling you the volatility threshold by minute range. And if the range is expanding, then your range is expanding down. Do you see that? And then once it starts decelerating, then the range expansion move is over. So if you can get a deceleration at a fib below all of your ranges, that is a good indication that that move is over. And it's not, again, necessarily a stop and reverse system by any stretch of the imagination. This is just walk sideways. So no, there's no buyers today. Everybody's sitting there waiting for the market to open to sell it. And where will they take it? I think there are some obvious places down here that I'll be looking at to see if that, catches support. Also, the one algos will come in on this one, the PT1B and A all the time. So you can do your own checks once you get the indicator. It's for NinjaTrader 8. And check these distributions and see where the algos come in on a routine basis in a normal distribution. Anytime you get out, see how right here it went to the one. Oops. That's that white line. See what I mean? Right there. Um, Anytime you get an abnormal move, an impulse move out of a break out of a range, there you're not in a normal distribution anymore. You're expanding the range and moving. So I cannot tell you when to buy or sell. I don't even know when to buy or sell. All I can tell you is what is a normal range, what is not a normal range, whether the range is expanding or contracting, and then you can make your judgment calls for your best places to enter and exit the market yourself. So, and the Martingale techniques, I think, work very, very well with this. If you're familiar with Martingale, by adding a second contract to go back in a direction that you want to trade to. Here's another PT1 touch and flush. Look at that. I mean, it's just perfect right here. And I like to wait for the candle to close. Some people will take the touch on the line. I guess if you had infinities level stacked on top of this, it would work real well. That would give you that double confirmation. Right here, we've got that fib level right on top of it. See that green line? And then you also had your prior open. So they were running those prior open stops. And that was a perfect place, a touch and flush, as I call them. But otherwise, wait for your candle to close to give you that, you know, permission to try for a bounce off that level. So it's just basically taking these ranges and normalizing them for you so that we can um, get a handle on how to trade in and out of them. All right. Thank you so much. Y'all have a great day and be careful in these markets. I mean, having volatility is wonderful. We had such a flat, sideways range forever. I think we're enjoying this. Everybody is having a great time stuffing the cash in the pockets. We didn't really need a Santa rally as long as they'll move price. But just don't bottleneck it. Don't make it walk sideways for 15 days at a time. Thank you. Bye bye.